You see that? You see that right here on the desk? That is Tesla tequila. And that's because if you're in Tesla, you need some tequila right now. Holy smokes, folks. The NASDAQ is having its worst day in the last 2 months. This market keeps going down, and we need to talk about what the heck is going on. It's not just tech. ARK-K is down 5%, ARK-G is down 5.64%, Tesla's down 5.5%. We've got ARK-F down 4.67% at the time of this recording, and it'll probably be even worse by the time you actually watch this video, which will be a few minutes after I finish talking. Oh my gosh, let's talk about what is going on and what's in store going forward. First, quick note. The marketing team I just hired to help with my courses is not ready yet to transition to a new code. So I guess while we are in the bloodbath of this market, you could still use code to the moon linked down below. Take advantage of that to join the programs on building your long-term wealth. Keep in mind there are great topics in there about not just stock investing, but also real estate, property management, how to make YouTube videos and profit from making YouTube videos so that way you can invest more in stocks that keep going down. All right, folks, let's talk about what the heck is going on. So first thing is we have a culmination here of multiple issues. Number one, the Fed is freaking out because their prediction of a cyber risk being the greatest risk to our economy is starting to come true. 2 months ago, Jerome Powell mentioned that the biggest risk that we need to focus on is not valuations or inflation, it's actually cyber risk, which initially we're like, really? Like what? Cyber risk? Really? Okay. And yeah, since then, well, I guess on Friday, I should say. On Friday, we had the Colonial Pipeline, which transports 2.5 million barrels of gasoline, diesel, and jet fuel from the Gulf Coast in Texas through to New York, shut down because of what appears to be a ransomware attack from the ransomware as a service company, DarkSide. Yeah, you think there's software as a service? We also have ransomware as a service. Maybe they should SPAC and we can invest in DarkSide. Oh man. But anyway, this company sells ransomware as a service, and they're suggesting that an affiliate of theirs must have used that software and crippled the Colonial Pipeline. There is no estimate yet as to when this pipeline will come back online, and this is creating some massive fears in the market for not just rising oil costs, but potentially getting oil tankers out to the East Coast so we could store more of the oil that we already have so we can use that. But also this is going to lead, and it already has, to rising gasoline prices, to rising jet fuel prices, and rising diesel prices, all which are input costs in transportation and manufacturing, which again push up prices in manufacturing, which can push up the price of consumer products, which eventually ends up pushing up prices, which means inflation. This is bad. At the same time as this madness is happening, this is really like the Ever Given 2.0, which is just another supply shock. That's just what we need after COVID. Anyway, what we hear now from the Federal Reserve via President Evans this morning is that it's going to be a while before we taper bond purchases because the Fed believes the economy still needs more support for longer, which is coming at the same time as the media and Wall Street are complaining that Biden won't end the unemployment boost sooner, leading to companies having to raise the amount of money that they are paying people, which is another input cost that goes up. Labor costs going up, not so good either, which is potentially because of, and this is debated, but potentially because of the unemployment boost, which basically pays you minimum wage to not work. Now, in fairness, many people need that boost. I'm not here to have a political debate about that boost, but it kind of makes sense. If you're working for $8 an hour, why not stay home if you have a choice? And technically, you're not supposed to stay home if you have a choice, but we all know how technicalities go with the government. Anyway, the market is freaking out over the fact that the Fed Evans is saying, hey, we're not going to taper anytime soon because the economy still needs support. In other words, the Fed's going to keep printing money. No sign of stopping printing money. We're going to keep printing money. While at the same time, wages are getting pressured up. Input costs are going through the roof, and now we have the supply costs making things even worse. And so when you tie all this stuff together, on top of the fact that COVID already increased prices for example, 40-foot containers. The latest pricing is somewhere between $2,500 to $3,000 for companies willing to lock in a 12-month contract, which is basically double what people used to pay for a 40-foot container. It's everywhere. Everything's getting pressured up. But when you combine all of this, containers, commodity prices, wage pressures, more money printing, higher taxation from the Biden administration not wanting to reduce spending, the Fed not wanting to reduce spending, and the market going, hello, have you seen copper? Have you seen the fact that iron futures shot up 10% this morning? Iron futures went up this morning as much as my Tesla options went down, okay? Like, it sucks. Now, in fairness, most of the companies that are reporting, like Kimberly-Clark or Coca-Cola or Nestle, whatever, a lot of the manufacturing companies that are talking about inflation and seeing inflation are saying that they believe they can offset a lot of the inflationary impact that we are seeing, because it's here, but they think they can offset a lot of it by going digital, traveling less, and focusing on more efficiencies. So you kind of have this struggle where you see these deflationary forces and these inflationary forces fighting each other right now. But the point is, the market's like, yo, this sucks. And so the market's dumping anything that's higher valuation, anything that has earnings coming in the future. So low earning companies like SPACs or newer companies, genomics companies, pharmaceuticals, whatever. Anything that doesn't prove you got big cash flow right now is just selling off. These people just don't want to hold these during the short-term inflationary bout. Now, usually, if we have longer-term consistent inflation and persistent inflation, we tend to see stocks actually rise. But right now, there's this rotation away from the higher value companies, which has been going on for 2.5 months. And anytime inflation expectations shoot up, we see these sell off because people are like, oh my gosh, everything is literally happening to make this worse and worse and worse. Now, as of this morning, we still hadn't even seen inflation expectations realized yet in terms of going up in the 10-year Treasury yields. In fact, if we go back about to the 1-month chart here, everything has continued kind of trending down. And even this morning, we were at about 1.65%. But folks, if I zoom into the 3-day here, we've had a little bit more of a jump. Look at this. We're at 1.60% now. We're up about 0.05% here. So we've jumped up a little bit today on sort of the drama and the news that's going on. On top of that, look at this. This is Bloomberg's report on 5-year inflation outlook climbing to its highest level since 2005. Folks, everybody thinks that's it. We've got supply shortages, Biden's printing money, Fed's printing money, people can't find workers because they're stuck at home. Literally everything that you need. Like if you were going to bake an inflation cake, these are the ingredients you would use. Fed printing more. President and Congress printing more. Supply chain disruptions that are leading input costs to go up. And how about we just shut down a freaking pipeline while we're at it to make gas and transport costs go up even more? Then on Wednesday, we got CPI data coming out, which the thing is, CPI data, remember, that's consumer price inflation. So it doesn't include these input costs. And we don't really expect the CPI month over month to go up that substantially, but that can lag. Year over year, it's going to be high. It's going to be like 3.5, 3.6%. It's going to be some of the highest inflation year over year that we've seen, but we're coming out of a hole. So the year over year number is not going to matter so much. The month over month number is going to matter. If that's up like 0.5%, it'll be like, nah, okay, whatever. If it's up like 1% or 1.5%, people are going to lose their freaking mind. You think you had a sell-off now? There's going to be even more of a sell-off. This is the bloodbath I was talking about at the end of last year, December and January, when I was saying, folks, people are going to freak the F out once we start seeing higher inflation numbers. And here it is. And this freak out is not going anywhere anytime soon. Now, a lot of folks are like, hey, I'm hedging during this. I'm going to buy puts. I'm going to short. We're seeing short interest go up at some of our favorite companies. Certainly at SPACs as well. You're seeing the shorts go up. You're seeing more put options. And it makes sense because hedge funds are trying to protect themselves against this madness. Me, though, I'm the madman that's like, I take all the extra freaking money I can get my hands on and I throw it into my highest conviction names. My Enphase, my Etsy, my Tesla, my Palantir, my Square. I don't care about the short-term crap. It's a problem. It's a big problem, and I don't think this problem's going away until at least September, October. We are going through hell. This is what it feels like to go through hell. Unless, of course, you're investing in like the Dow Jones Industrial, then you're at all-time highs, or the S&P 500, then you're okay. So really, if you're investing in ARK or any high growth strategy, congratulations. You sucking right now, but you got a great buying opportunity. So do you have the time in hands to buy the dip? Or you gonna weenie baby out and go buy something else that's already doubled or tripled in value? Like, I don't know, I won't say like what. But there's plenty of other stuff that's doing well. So anyway, there's a little bit of an update on what the heck is going on. And it's a lot. It's a lot to digest. But no, these issues, they're not going to go away in the short term. They could continue to get worse in the short term before they get better. So buckle up, folks. Thanks so much for watching. We'll see you in the next one.